George of the jungle.
Okay, I just want to continue on with a theme that we had started talking about: bankruptcies, forbearances, foreclosures, and a lot of that stuff. And I just want to help people understand that you cannot include a house in a bankruptcy when you file a bankruptcy. And I'm going to explain that from the term of a lender, not an attorney. That's what we're talking about in thecreditjungle.com today. This is George Anderson, and thanks for joining. And as I mentioned, I had done my first loan for somebody that was in a Chapter 13 back in 1989. And I became fascinated with the whole process and how you could do this and learning about stuff. And in the process of doing that, I've taken a little over 100 hours of continuing legal education. I don't need it for my license. It has nothing to do with the mortgage license. But I've gone to several of these classes, and I've been in there in the classroom with several prominent bankruptcy attorneys who are extremely competent and very knowledgeable in their area of the law. But again, you need to ask yourself, when you go to apply for a loan, do you go to your bankruptcy attorney and apply for a loan? No, okay? So I'm going to explain how things work, the bankruptcy portion, and how it affects your credit and your ability to purchase another home when you are including a home or a mortgage into a bankruptcy. So I'm going to just touch on Chapter 7 today. Chapter 13 is a whole different article of the Bankruptcy Code, and it's got a lot more moving pieces to it. But a Chapter 7 is basically a liquidation bankruptcy. And so what people will do is they will think that, well, I don't have that much equity in my house. I'm going to file a bankruptcy and I'm going to include the house. And their attorney will tell them, let's include your house. And so people think that, well, I included my house. Well, look at my bankruptcy papers. Right here on Schedule D, where it's secured assets, I listed my mortgage, and here's PennyMac, or here's Wells Fargo, here's my property address, here's the amount owed, and does the debt actually get discharged? Think about this for a second. Because if the debt actually got discharged, you'd be able to stay in your home and never have a mortgage payment. Okay? Bankruptcy Code does not allow you to do that under any chapter of the bankruptcy provision, because people would have figured out how to abuse that. So that doesn't happen. But anyway, I think it was the Nobleman case several years ago, 20 years ago, that established that you can't do that. And that was actually a Supreme Court case ruling that you can't discharge bankruptcy debt. I'm sure there's an attorney out there that'll correct me on that, but that's what I remember from my CLE classes. But what you're doing in exchange for that is you are surrendering the home back to the bank. You are giving the bank the keys and saying, here you go. And the bank will say, okay, great, you guys go ahead and vacate the house. You guys can list us as a secured creditor. And the bank at that point, what the bankruptcy does do, it protects you from recourse of the bank taking the home to a foreclosure sale, not getting enough money to pay it off. In other words, let's say you owed $300 and the bank sold for $275 at the auction. Under normal circumstances, you would get a deficiency judgment against you for the difference. The Chapter 7 says that portion now is an unsecured debt because it's not attached to the house, because the house basically took up the remainder of the secured amount of that debt. This is unsecured. So that's discharged. But the problem is, and this happened a lot during the mortgage apocalypse back in 2008, 9, 10, and 11, a lot of these banks would take back the house. But guess what? They never filed a notice of default. They never started the foreclosure process. And remember, you hear that term shadow inventory. In other words, you had all these bank-owned properties, but the bank never prosecuted the foreclosure process. So here's somebody who got their bankruptcy discharged, say a year ago or 2 years ago, and then they find out that the bank just now is initiating the foreclosure process. So this is the one thing that I want everybody to remember, and I really wish that I could teach this in a classroom full of attorneys, which I really would like to do sometime. But the bankruptcy discharge and the foreclosure are separate events. They're completely separate events as it pertains to your credit. So most Chapter 7 bankruptcies, you are eligible to get an FHA or a VA loan 2 years after the discharge date. But if there was a home included in there, we're like, well, we got to see what happens to the house. Well, what that means is you got to go back to that property, you got to go to the title company, give them the property address, and tell them to look for what is called a trustee's deed. And it is something that gets recorded when the bank completes the foreclosure sale. So that date, let's just say that that date is a year after you got your bankruptcy discharge. Well, people are sitting there thinking, well, I got my discharge, I gave the bank back my house, so I should be good to apply for a mortgage 2 years from now. Well, they come into the lender and the lender says, oh, wow, this is great. And I've had many times where lenders have screwed this up because they don't do a lot of bankruptcy loans. And it gets to the underwriter, and the underwriters don't miss this stuff. The underwriter says, well, I see there was a property included in here. Please give me a copy of the trustee's deed. Well, they find out that the trustee's deed, the foreclosure that the bank did, they sat on the house for a year, then they took it through foreclosure. Well, guess what? There's a separate timeline now that starts for the foreclosure, and if it's an FHA or a VA loan, under most circumstances, that is going to be a 3-year timeline. So they don't get to go and get another house 2 years after the discharge of their bankruptcy. It's 3 years after the foreclosure, and the foreclosure was 1 year after the discharge. So now they're in the penalty box for 4 years. So again, remember one thing, bankruptcy and foreclosure, as far as your credit's concerned, they are two separate events. And if there's any way that you can avoid foreclosing on a home, if you ever intend to own another home again, try to find a way to not do that. Anyway, we'll get into some alternatives on how to avoid a short sale, how to avoid a foreclosure. That's a whole nother series of videos that I would love to share with you, but just some word to the wise. And thanks much for dropping into thecreditjungle.com today. This is George Anderson. Push button, get mortgage professional. I would love to talk with you about your situation, and have a great day.